gentlemen. I think lunch was indeed very heavy, and I can still see the impact on audience. Anyway, we are running behind schedule also, and therefore I will try to be as brief as possible, because just 10 minutes are not enough to deal justice with the topic that I have been assigned to. The topic was how digital banking can actually change the landscape of financial services in Pakistan. How can it make a difference? What's the way forward on digital financial services? So first and foremost, what's the role of financial services in any economy or any country? I think there are three basic indicators of any country or any society or any economy that tell us the state of development. One is education. The second is healthcare. And these are very interlinked, closely related. And third is access to finance. An efficient system, financial services system, helps savers and businesses to actually use the liquidity efficiently, use the money efficiently, and unleash the productive resources of the country, our economy. In our case, if we look at 75 years history, we have hardly reached about 50 million bank accounts, despite the fact that banks are very old institution. They exist not only since establishment of Pakistan, but some of them are very old, actually, having roots before that. And if we look at the core of the access finance, which is access to credit. So out of a population of 125 million, even today, the borrowers are hardly about 10% of the eligible population. What does that mean? That 90% of the population of this country, adult population of this country, who are eligible but do not have access to finance, and therefore, no matter how bright ideas they have to contribute to the economy of the country, to start a very productive venture, but all they can do is to depend on their own savings, which many people don't have, especially youngsters, or to borrow from family and friends. There is no formal finance that is available to them, 90% of the population as of today. So that's why the digital technology can play and has to play a very game-changing role here. If you look at the digital landscape as of today, there are many Fintechs in the country, big and small, who are trying to play a role in actually moving from the conventional distribution system to the digital system. Because as accountants, I think nobody can understand that more appropriately and more the consequences of it, of the traditional system, the cost of it, which system has to bear, that there are about 15,000 bank branches in Pakistan. And if every bank branch costs around 10 to 15 million rupees minimum, then hundreds of billions of rupees, an estimated 300 to 500 billion rupees, have sunk into just brick and mortar. And brick and mortar is becoming increasingly irrelevant, as you and I now don't need to go to a bank branch. We can transact all of our business digitally. Most of us use apps for our payments, for money transfers, for paying utility bills, for children's fees, etc. What does that mean? That retail bank branch system is becoming obsolete, and more technology-driven solutions are being adopted in the market, and the pace is just accelerating. This also means that once we fully benefit from the digital technologies, the cost of doing business is going to come down significantly. As I said, the expenditures in the brick and mortar are going to go away. So who is going to get the benefit? Either it's the consumer or it's the institution. And ultimately, this efficiency results in more productivity in the economy. Now, as of today, if we look at how technology has made some impact on Pakistan's financial services landscape, we started an experiment of branchless banking in the country in 2009 when Telenor launched Easy Paisa, a mobile financial services business. And 3.5 years down the road, Jazz Cash was introduced in the market. As of today, we have more mobile bank accounts in the system than regular bank accounts. And to tell you, the utility of it, that mobile bank account can almost do anything and everything that a regular bank account does. We can transfer money, we can pay utility bills, we can earn interest also if we want to, we can move funds from one bank to another. So almost the functionality is the same that a regular bank account has. Now, that's why going forward, State Bank of Pakistan has actually come up with an idea of just digital banks given exclusive mandate to basically develop and further scale the technology for digital banking to the next level. And hopefully by end of the year, 5 to 6 or 7 new players will enter the banking landscape, which will be just digital banks. So my sense is that with the efforts and experience of last 8 to 10 years in the mobile financial services space, where Fintechs have experimented and provided solutions like payment solutions and also mobile wallets, the next stage is going to be very exciting. And these with introduction of these new digital banks in the same manner as is happening elsewhere in the developing and developed countries also. Other countries are doing the same. I think the cost of intermediation is going to come down. Customer convenience is going to be much better than it was yesterday or it's today. The concept of turnaround time for any customer request to be met is going away. It's real-time delivery of service or product. Whatever you wish, I mean, it can be executed in just a second or a minute. It's today possible, if you want to experiment, that you can get a bank credit just by pushing a button, and it doesn't take more than 1 or 2 minutes to have that basic nano credit available to you. So this is going to develop further, and now the SME financing products and other retail banking products are going to be developed. So my sense is that we are at a stage in Pakistan's financial services where digital banking will actually make a major contribution and will help us in actually turning around the economy. Thank you very much.